Well, welcome to the South Central Partnership for Energy Efficiency as a Resource. This webinar is sponsored by the City Efficiency Leadership Council and the State Energy Conservation Office. I'm Sean Auckland. I'm the Local Government Program Manager here at SPEAR, and I'll be moderating this webinar. Can you see my screen okay? All right, great. So a little bit about SPEAR. We are one of 6 regional energy organizations. We cover Texas and Oklahoma. Our work covers policy, building codes, high performance buildings, and local government. We have a wide array of membership, including energy utilities, advocacy organizations, cities, trade associations, and manufacturers. And I have mentioned earlier the City Efficiency Leadership Council. What is it? It's a collaborative network of Texas cities, school districts, and other governmental agencies engaged in partnership and resource exchange, and an effort to expand the adoption of energy management best practices in the public sector. So you're welcome to, you can get more involved with CLC. We have roundtables, and we also have these webinars. And if there's something you want to hear more about, we are happy. Just send me an email and I'll share my email information at the end of this webinar. And you can let us know what you would like to learn more about regarding energy and energy efficiency. And then I also, the word city is in the name, but we cover also with other agencies, counties, universities, and school districts. A couple of announcements before we get started. This webinar, if you are attending and watching it fully, you can receive ICC CEUs. So make sure that you put, whenever you respond to the survey that we send out, and then if you are on the phone, put your phone number in there so we can know what to look for so you can receive the CEUs. And then a couple of upcoming events. On January 18th, we have a workshop, Demystifying Local Government Energy Reporting. It's a sequel. So we're joining the North Central Texas Council of Governments and partnering to talk about the local government energy reporting requirements for cities and counties and the non-attainment region of Texas. So those counties are listed, there's about 40 that are in non-attainment. They need to report to the State Energy Conservation Office. And so we'll talk and go walk through that process and what it's like to report and who to talk to. There'll be a representative from the SECO office as well as a local staff member who's reported and can give us the ins and outs and good tips that they've experienced on gathering the data. And we also want to say that we're participating with the Texas Energy Summit, and that's coming up in March 3rd and the 4th. And there may even be a SPEAR partnership workshop that we can talk more about later. Just look at our calendar of events page. And then again, please always fill out the feedback survey, especially if you want CEUs, but it's great to get input on how we can improve these webinars. All right, well, without further ado, because I'm very excited about this information, and that's why you signed up for the webinar. So I'd like to welcome our speakers today. We have Stephen Brown and Madeline Priest. Stephen Brown, he was the founder and interim CEO of the Clean Energy Fund of Texas. His career spans over 20 years of government relations, public affairs, and energy sustainability experience. He was the 2014 Democratic nominee for the Texas Railroad Commissioner, which made him the youngest African-American to win a statewide primary in Texas. He's also started the Texas Clean Energy Fund of Texas. TxCEF is focused on making the emerging green economy affordable just for all Texans. And I will allow for him to talk more about that. But before we move on, I also want to say a bit about Madeline Priest. She's the Associate Director of the Market Engagement for Inclusive Prosperity Capital. She's joined them at their inception in August of 2018. She's an in-house expert on how to make financing programs for homeowners successful and leaning on her extensive background in community organizing, solar and energy efficiency. She understands how to inspire contractors, lenders, and communities to be effective in their efforts which is quite a feat.
Mhm.
And she holds a Master of Public Administration degree from Fairfield University, a certificate in nonprofit management from Marble College, and a BA from University of Puget Sound in international political economy with an emphasis in global development studies and a minor in environmental policy and decision making. Thank you both for joining us today and giving your time. And Stephen, if you want to go ahead and set up your slideshow.
Okay, there we go. Let's try this again. Well, thank you, Sean and Spear, for allowing us to spend some time talking to your group about these very cool and exciting green lending products that we're planning to bring to market here in Texas. I know that Oklahoma is a part of your jurisdiction as well. And although I don't believe there is a green bank in Oklahoma yet, I think that there are definitely efforts underway to bring one into existence soon. So let's get started. So the way we've structured this presentation is, we'll begin with a little bit of background and mission statements for the Clean Energy Fund of Texas, or TxCEF, is what we like to call it. Next, we'll explain in detail a little bit about the problems that we are seeking to address. From there, we'll go into some of the green lending products and programs. I will touch on those products. Madeline will dive deeper into those offerings when we get to her. I'll hand it off to Madeline to tell us a little bit about Inclusive Prosperity Capital and our relationship together. And then she will do that deeper dive on their green offerings. So as Sean mentioned, the Clean Energy Fund of Texas was established last summer. And so we're a new startup nonprofit green bank. And I've added my mission statement here, and I'll just read it for you. You can follow along. The mission of the Clean Energy Fund of Texas is to make clean energy resources affordable for all Texans. We believe that an equitable transition to clean energy will mitigate the impacts of the climate crisis, eliminate energy poverty, create green jobs, and catalyze economic development opportunities in historically under-resourced communities. We will accomplish this by accelerating the flow of green capital into underserved markets to provide all Texans a healthier, prosperous, and just future. We spent a lot of time working on that because we wanted to make sure that the reasons for establishing this entity tracked kind of the core values that we brought to the table. As a board, as some of the leadership advisors who were part of the formation of the Clean Energy Fund of Texas. And so that's our mission statement, and we'll talk a little bit more about what that means moving forward. So a little bit about green banks before we get too far into the weeds here. Traditionally, green banks have been established by their state legislatures and set up through general revenue or through some dedicated account in the state budget. For the states that don't have green banks established by their state legislatures, those states like Texas have nonprofit green banks. In fact, we're the only one in Texas, but in other states throughout the South and Southwest in particular, and some places in the Midwest, there are nonprofit green banks. And the way that it works typically is that green banks are funded through a combination of private investment, philanthropic fund grants, as well as any federal dollars that may come our way. So right now, Congress, in the President's Build Back Better package, there's actually a federal appropriation for green banks, and not only to shore up the ones that are in existence today, but also to stand up new green banks. And so when I reference Oklahoma not having one yet that I know of, that the efforts in the Build Back Better reconciliation budget would help to stand up a green bank in Oklahoma, as well as to help to stand up our green bank as well. And essentially the way that it would work was that if passed, that appropriation will go to the EPA, who will create a nonprofit accelerator, Clean Energy and Sustainability Accelerator. And then that accelerator will deploy capital to green banks to do a variety of different investments for green energy in local communities. And again, the idea is that we can leverage that those federal dollars to bring in additional private money as well to really have an impact at the local level. So what impact are we trying to address here in Texas? Namely, we are trying to make a dent in energy burdens, energy poverty, energy insecurity that is gripping some 4 million households in the state. Energy burdens are typically defined as situations where households are spending at least 6% of their income on energy. As I mentioned, about 41% of the state, almost 4 million households in the state of Texas have an energy burden ranging from 6 to 16.5% of their income. And we know that financial barriers present the most significant obstacle to resolving these energy burdens. The availability of federal state funding, access to credit and capital for low to moderate income families really help to drive this burden that forces many families to make trade-offs, whether to buy groceries or transportation, clothes, healthcare, or pay their utility bills. And so here's a map of Texas that kind of gives you a sense on the right where some of the hot spots are as it relates to energy burdens. We discuss under-resourced communities, disadvantaged communities, low to moderate income communities. We're talking about communities that are in urban, border, and rural parts of the state as well. And then again, another way of defining and addressing this is by using energy insecurity, where we know that although we may have some pretty low electricity rates, we also have some of the highest residential bills, energy bills in the country because of our hot summers and at times cold winters in different parts of the state. And so we want to make sure that energy insecurity that disproportionately impacts communities of color, elderly communities, that we can provide some assistance to bring their homes, their businesses, their schools into a situation where they are more energy efficient, where they have access to renewable energy, so they can begin to reduce the amount and the cost of energy in their communities. So here's a list of some of the products that we will be bringing to market with IPC, Inclusive Prosperity Capital. I'm not going to dive too deeply here because I know that Madeline is really going to do a deep dive on all these offerings. I just present it here just to make it clear that the offerings that we'll be bringing to market are consistent with the offerings that IPC has developed, and we seek to be a partner with them moving forward as we deploy some capital into Texas. I will spend a little bit of time here on the programs. As a nonprofit, we understand that needs in these communities not only need to be addressed as it relates to the deployment of capital for green energy improvements, but also what other types of programmatic needs that these communities have an appetite for. For instance, energy literacy. We are seeking funds to be able to offer energy literacy workshops in different parts of the state, particularly the parts of the state that are deregulated, to help families better understand, how to read a contract, how to select the right retail electric provider, how to ask for green renewable energy as a source of their power. Green workforce development also is very important as we discuss ways in which not only to catalyze investments in communities, but also how to empower people in those communities to be a part of that change and to be able to gain the skills to, whether it's installing solar or whatever types of energy efficient improvements that could be made on residential, multifamily, or nonprofit commercial buildings, for instance. Credit enhancements are a pretty common usage of green banks throughout the country, of those that exist as it relates to partnering with credit unions or commercial banks and providing loan loss reserves, any way that we can help to de-risk green lending in the market. We will play a partnering role there as well. Energy audits, obviously being able to provide services for families where we can help them identify opportunities for sustainable improvements. Advocacy, obviously we want to help to advance policies that are consistent with our mission. And then finally, technical assistance, being able to provide assistance to local governments who may have green loan or green grants that they are wanting to enter into markets and to deploy. Perhaps having us help out with administrative type of aspects of that work, helping to underwrite that work as well. I know that a lot of local governments are really strapped with a lack of resources, lack of manpower in order to do their work. And so we can obviously fill in any gaps and provide for any program assistance or technical assistance for local governments who are looking to do their own green loan programs as well. So with that, here's my contact information. And I know that this will be made available to folks via YouTube and other means. So by all means, please give me a call if you have any questions outside of today, or if you think that there might be some opportunities, there might be some projects in your community that we might be a good fit for, that IPC and myself can go in and see if we can't be a good partner for you moving forward. So with that, I'll pass it on to Madeline, and she will talk to you about IPC.
Thanks, Steve. So that was a really great overview of kind of how green banks work and kind of their purpose and their intention. Believe you're driving, Steve, right? So next slide. So IPC, we actually were spun out of the Connecticut Green Bank in 2018. The Connecticut Green Bank is one of the first green banks in the nation, behind Michigan Saves, which is a infamous or a famous nonprofit green bank model. And the Connecticut Green Bank is a state agency, or a quasi-public state agency. So we were spun out of the Connecticut Green Bank in 2018 to help take those programs nationally to really help start up green banks around the country, such as the Texas Clean Energy Fund. We're really focused on aligning investment capital from larger lending institutions by developing financing programs that are really designed to help serve kind of those traditionally under-resourced, underserved communities as a part of the clean energy movement. So this often looks like us providing kind of financing solutions to new green banks maybe don't have the capital or don't have the people to help kind of build products, and there's no need to really reinvent the wheel. That's kind of what we do. So if you go to that next slide. So we have 4 products I'm going to talk about today. The first one being our Navigator PreDevelopment loan. So this is a really great product for multifamily, especially affordable multifamily, commercial buildings, condos and co-ops, where maybe things are kind of metered jointly and not independently, housing authorities, nonprofit organizations, government buildings. Oftentimes, those types of properties have a hard time utilizing PACE financing, for example, right? It's hard to do a property assessed lien on a municipal or government building. Nonprofits, often it's really hard for it to pencil out. And in multifamily properties, this is an issue depending on where they are kind of in their billing cycle, right? So we actually have two products that we've created. This one's kind of the pre-development loan, which traditionally PACE wouldn't cover some of these measures, versus our Catalyst loan, which I'll talk about in a moment. So really our Navigator pre-development loan was designed to help kind of do those early steps of determining what needs to be accomplished, and kind of coming up with that plan to actually do the energy improvements in these buildings. So that looks like financing energy benchmarking, any sort of other opportunity assessments, any real audit, energy audit, the designing of any energy project, engineering, bidding work, any of those kind of costs that can be really prohibitive for these types of building owners to proceed with energy work, right? So it's a product that can be used in both existing and new construction, although typically we tend to see it more with existing buildings as part of their like retrofit and greening process. The way the product works is up to 75% is financed, and then the owner covers 25%. That typically comes from like grants, rebates, other funding streams. That's the nice thing about all of our products, is that other financing and other incentives can all be kind of woven into this, and we can help cover gaps where they may exist. This product is really kind of short-term line of credit. It's up to 24 months, or once permanent project financing sets in for the actual energy work, kind of beyond the scoping, the actionable parts begin. There's no monthly payments. It's all a balloon payment once the 24 months hit, or the permanent project financing starts. And we do this as a kind of lightly secured or alternatively secured. So there's like a UCC1 filing. It's not a lien in any way. So the interest rates kind of depend on the type of property, but it's pretty competitive for the Navigator product. This is pretty competitive in the market. All right, next slide. So an example of where we've seen this work really well is in Connecticut with the Bridgeport Success Village Co-op. So this is an affordable housing co-op set of homes, and Connecticut has some of the highest energy rates in the country. Bridgeport, Connecticut is one of the highest energy burden cities in the entire country. So there's a lot of opportunity here for us to really help people. So there was 964 units. It's World War II, kind of post-World War II workers housing. Their central heating was needing a real overhaul. It was basically built with the buildings. And so they had high costs ahead of them to address these issues. So we worked with them, kind of again, pulling in other funding streams to help them kind of they used the Navigator loan to do some engineering, project development, and technical assistance from our staff, as well as kind of helping them determine with the engineering process what heating system was going to best work for their building. And they were able to bring in another stream of funding to address the health and safety issues that they had with the asbestos in their building, which was preventing them from even doing the engineering work and getting an HVAC contractor who wanted to come in and replace the system. And so kind of bringing all of those funds together, we were able to help them address their kind of upfront concerns and issues to then move into the implementation to install high efficiency HVAC for their property. Next slide. So the other loan product is our term loan financing, or Catalyst. This is long-term financing up to 20 years for energy and health and safety improvements, as long as energy is somehow involved. It's really great for mid-cycle multifamily properties. This was designed as an alternative to PACE. In Connecticut, we're trying to help all these multifamily properties make these big energy improvements. And what we were finding was they were not qualifying for PACE. PACE was not a good fit. It was very hard for them. So we developed this kind of alternative product for them. And this can actually be used in nonprofits and government buildings as well. It's not specific just to multifamilies and affordable housing, although it's designed for that originally. It's a little more broad in how it can be used. So it's a subordinate, non-mortgage secured product up to 20 years. The loans are actually, and the underwriting is kind of done based on energy savings, maintenance savings, and other kind of documentable operating cost savings. So this is a great product for us potentially in Texas, where the energy costs aren't as high as they are, say, in New England. But there are a lot of other opportunities to be having some real savings to either operating or buildings or maintenance of buildings. And so a great example of this is our partnership with Fleet Development in LeGrand, Oregon, Enterprise, Oregon. They own a bunch of affordable housing properties in very rural, very poor Oregon, where they are putting solar on these housing authorities, senior centers, kind of all of their properties that they own. Oregon has some of the lowest energy costs in the country, thanks to the prevalence of renewable energy, such as wind and hydro. And so we were able to still make this work because there were so many maintenance and operating cost savings that we were able to calculate into this. So this is a great example for how this might look and work in, say, like Texas or Oklahoma. So they did a 12-year financing for kind of their suite of properties that they owned. We really focused on energy savings, which did exist, but they were lower than we typically would look for, but they had phenomenal operating savings. And so that's what was able to allow us to finance these projects. And this again is under Catalyst, the unsecured or lightly secured interest rates and terms. So next slide. And really one of our more popular products across the country is our solar power purchase agreement, which is really designed for the commercial scale, where we own and operate the system. It's very good for kind of some of those smaller projects, up to a minimum of 50 kW. You know, it's a great option for nonprofits. We have actually seen primarily houses of worship or faith-based entities taking advantage of this product. Again, because there's no lien with this. This is just a power purchase agreement. They're purchasing the power generated by the solar panels placed on the roof over a 25-year period with the option to purchase and own after 5 years. So an example, if you go to the next slide, is our partners with Mission Energy. They are a developer, turnkey solar developer, who really works with faith-based institutions around the country. What you can see here are actually pictures of our partnership. They just energized, and unfortunately we weren't able to do a ribbon cutting like we wanted due to COVID, but in Catholic Charities in Southern Nevada, so outside of Las Vegas, they installed this really beautiful array to help one of their multifamily properties for low-income individuals. And they are seeing very great savings from this, electric savings just from the solar PPA itself. They're projected to see great savings. I just energized, they haven't seen any yet. All right, and then so next slide is I wanted to talk about something that's coming down the road for Texas that we're very, very excited about. IPC, along with some of our partners, University of New Hampshire Kersey School, as well as Inclusive, which is the trade association for low-income designated credit unions in this country. We received a grant that we haven't yet announced, but we did receive it, that is allowing us to take our single-family financing program and launch it in Arizona and New Mexico, starting this year, and hopefully next year, Texas. So we're super excited. This is a product that works through a set of kind of participating credit unions and community banks and CDFIs, so local lenders. It's their capital, and we have basically a program description and a program kind of formula that we provide to our partners in these organizations or in these different locations. It's their lending to the contractors directly to do this residential energy financing, energy efficiency. So it's an unsecured personal loan for homeowners. It's for 1 to 4 units, as long as one of those units is occupied by the owner. It's low interest financing with flexible terms, which is enabled by a loan loss reserve. So typically an unsecured personal loan at 10 years, at least at my credit union, I just looked this morning, it was about 15%. So this less than 5% is pretty great for 10 years. All customers get the same interest rate no matter their FICO score. So we allow FICOs down to 580. And the debt to income ratio up to 50%. The debt to income ratio screen is waived for customers with a 680 FICO or higher. They still do an income screen to make sure that we're not setting homeowners up for failure if they have no way to repay their loan. But they aren't doing the ratio for better FICO scores at 680 or higher. And this product is designed to allow homeowners to finance basically anything that's going to be saving them energy or generating clean energy for them. So that's heating and cooling, geothermal, insulation, new windows, hot water heating, micro CHPs. It's kind of dependent on each market and kind of what the policies are around residential energy in each of those markets. We align with those incentives that are available and those policies that are kind of set forth by either the energy office or we even take sometimes the DOE's guidance where necessary if there's not an active energy office. And so the loans, because it's such a wide range of what customers can finance, is anywhere from $500 up to $40,000, and 25% can be set aside to address kind of those other issues. So similar to how for multifamily properties, we have Catalyst and Navigators as in one loan product, 25% of the borrowed amount can be towards electrical upgrades. So let's say a customer wanted to do a heat pump in their home, but they needed to do an electrical upgrade before they could install their heat pumps. That electrical work, as long as it doesn't exceed 25% of the total loan amount, can all be rolled into the Smarty loan. So the customer has one payment back to their credit union. And then our contractors really like this. It's a local network of local contractors who are eligible to offer this product to their customers. They love this product because they actually have working capital built into the nature of this product. They receive 1/3 of the funds upfront upon loan closing, which takes place before they start the work. And then the final 2/3 of the financing is presented to them upon proof of completion. So this is a really exciting opportunity. We're super excited to start launching this in hopefully 2023 in Texas specifically. But again, can be kind of anywhere if people think that there's interest and opportunity. Next slide. I think that's it. So I think at that, we'll take questions, right, Steve? Yeah.
Yes.
Great. Well, we have a couple of questions. The first one is, does the IPC PPA work in low cost power, Texas? And then what client kilowatt rate would you require and what project CapEx to make this work?
So far, no. The PPA just really doesn't pencil in places like Texas. I think that there may be a situation where our team might say like, this is worth it, or it would be feasible for the end user, the building owner. But we don't want to set people up for a situation where they're not going to be seeing savings. And so that's why we kind of collectively thought that the Catalyst is probably a better fit in Texas. Because if people want to own solar, that there's energy savings there, but there can be some operations and maintenance savings that can kind of be rolled into that to help our underwriting. We have a little more flexibility with our Catalyst loan product.
Great. And then the second question, where the webinar is focused on energy, do the green banks have some wiggle room for EV vehicles?
Yeah, absolutely. And I probably should have kind of spelled out more in terms of the real menu of offerings that green banks can provide in states throughout the country. But decarbonizing transportation is a big piece of it. And I know that there are a lot of green banks throughout the country that do have a very strong focus as it relates to financing the EV chargers, and maybe even auto loans, or at least they're looking at ways that they can provide auto loans for EVs as well. I will say though that until we are fully capitalized through Build Back Better, or we also plan to go to Austin this next coming legislative session to create in Texas what has been created in other states, right? And so the state government has been a partner with green banks in a number of different places throughout the country. And so we're planning to go to Austin this upcoming session in 23 with a proposal to do the same here, right? And using the Clean Energy Fund of Texas to be kind of the conduit through which funds can be deployed that range from some of the things that Madeline spoke about for residential, commercial, industrial energy improvements, but also in terms of transportation, in terms of resiliency, looking at even community solar, community battery as some opportunities moving forward for us to really play a role in even sustainable ag and really a deep decarbonization of industries also fits within the world of what green banks can do. But we are limited until we have those funds available to us. We can only come to market with Catalyst and Navigator right now. Hopefully we'll bring in Smarty in the next 12 months or so. But until we have a bigger tranche of resources from the public sector, we will be limited in what we can do for EV chargers.
Okay. And this person asking the question, they were specifically looking at EV owner operator drainage trucks for the Port of Houston, and then perhaps EV equipment at the Port of Galveston, which would be a government entity.
Yeah, I mean, look, the good news is that the infrastructure bill that did pass has a lot of money in it for EV resources. And so we would be more than happy to work with anyone who is involved in that work and to see if we can't draw down on some of those resources that have been that are made available now to be able to accomplish that for the Port of Houston, or for any other entities that are looking to do to expand access to EV chargers, whether for their own facilities or campuses or for the general public.
Thanks. And then here's a question on the renewable travel center hotels sequester carbon dioxide and eligible for carbon tax credits. Any funding resources for these projects?
Not currently, not now. Madeline, you guys don't have any products that touch the tip.
I have not heard that conversation internally, so
yeah, not yet.
Idea.
yeah. And that's another thing about it is that I want to make sure that the things that Madeline and I are talking about are kind of the time-tested tools and vehicles to expand access to renewable energy and energy efficiency, but it's not all inclusive, right? And so I think we do have an opportunity right now to look at new opportunities, new ways that money can be used to decarbonize. Whether it's innovative technologies like carbon capture, which technically green banks can invest in those types of projects moving forward. The ones that have that type of funding available. And I know that we're a startup, but there are states like Madeline mentioned Michigan and New York and other states that really have huge balance sheets where they're able to leverage to do a lot of innovative type of financing for different types of projects. We hope to be them one day.
Are there any loan origination fees and early repayment penalties?
Yeah, that was a great question. Sorry, I skipped over that. There is an origination fee of 3% for Catalyst, and it can get rolled into the cost of the loan, and there's no repayment penalties.
Great. And here, there's one. This is maybe a bit off topic. Any examples of using third-party partnership flip structures to add energy efficiency and renewable energy to municipal facilities in order to monetize tax benefits, where the municipality is not interested in long-term financing or PPAs and has a low-cost negotiated 10-year renewable energy contract already?
Marilyn, you know.
I am sure that Bert Hunter at the Connecticut Green Bank has great examples of this. I'm not that familiar with examples of that. You know, I feel like that is the struggle, right? Is that oftentimes municipalities aren't interested in taking on long-term financing. And so you either have to kind of take it in bite-sized chunks that they're willing to address, and are kind of willing to take what is their appetite. You know, I haven't seen it too frequently. Typically what I see is municipalities doing the solar power purchase agreement, or taking like their really run down housing authority multifamily properties that they know are like pretty unjust, the living conditions people are living in, and doing kind of just like the bare minimum to bring the building up to code. To be very frank with you.
Yeah, or you know, maybe even energy as a service type vehicles as well, that makes sense on a kind of a project by project basis. So yeah, these are all great questions, and I'm glad that so many folks were able to join us today and to ask. You know, I do believe that, you know, kind of what we offer is a baseline right now of kind of the minimum of what the state should have access to. But it's not a one size fits all type of scenario. And so, you know, if there are some pretty unique projects that you have questions about moving forward that may not fit cleanly in Catalyst or Navigator or Smart-E, you know, still reach out to us. You know, I think we can put our heads together and try to figure out a solution, or at least point you in the right direction of where answers might be and where resources might be available.
And then there's some also questions, you know, what is the balloon payment for?
Yes, I was typing an answer. So the balloon payment for Navigator is the 75% that the customer borrowed upfront. They kind of just owe it all back, plus the interest. So for market rate properties, assuming this is multifamily or nonprofit, it's a 3.99% interest. If it's an affordable multifamily property, it's actually, I think that's what I was confirming, 1.99%. Yes, 1.99% for affordable multifamilies. And it can be naturally occurring. It doesn't have to be Department of Housing HUD subsidized in any way. It can be naturally occurring. Affordable housing, I think it's a ratio of like at least 60% of tenants have to be considered 60% of area median income. I think that's the metric.
And then there's a pretty specific question you see in the chat. Will homeowners in Harris County be eligible for the project, or will it just be the municipality?
Yeah, so there's kind of two different types of financing. So we have kind of the Navigator Catalyst financing, which is really good for building owners, like multifamily properties, nonprofits, commercial properties. The Smart-E loan is designed for homeowners and single family properties. And that can work for condos too, as long as they're individually owned and metered, and that they have kind of the rights to do within their walls, right? Some condos are structured differently. So for homeowners, they'd have to wait until Smart-E was ready to be able to take advantage of any of the IPC financing.
Mhm. Yeah, and I will say though, there are conversations at Harris County about how to approach sustainability in a way that can better households and help households adopt to renewable energy and energy efficiency as well. So I'll also say stay tuned because I'm in those conversations to see what comes out of that and how the county might look to leverage its own resources and be able to benefit communities throughout the county as well.
Yeah, and that was one of my questions is how, I mean, these are fantastic financing options, right? And when Smart E comes out, you were talking about energy burden. How do you all plan on rolling this information out so that it would be able to be accessible, right? Because if you don't know, you don't know, right? And so how are you really going to roll out this program to that specific audience?
Well, it starts here. These are the types of things that we're doing, and we have a runway to be able to continue to do and build relationships with folks like yourself, Sean, and Spear, other contractors. I think the contractor community can be a huge channel partner in getting the word out to different households and their client base. Utilities also help to us to get the word out to their customers about these offerings as well. So, it's a lot of stakeholder engagement, a lot of customer development, and obviously Texas is a huge state. So, we can't be everywhere all at once, but if your members know of opportunities for us to go out and speak to folks about not only what we have today, but kind of, where we project to be in the future. And if there's an audience that your members think, we would add value to a discussion, I'll be more than happy to join. I know Madeline will be more than happy to join and to provide for a similar type of presentation, wherever it could be helpful.
Say, I mean, I'm the associate director of market engagement. So to me, that's the fun part of my job, is getting to talk about like, how do we get the word out about these things? And I'm a community organizer by trade. So for me, it's really about, how do we find where people gather, who are the information centers for each community? And, everywhere's different. So if this is something where we bring it to your community and you have great ideas about how to get the word out, like I have resources for all types of organizations to help spread the word. It's just about finding the right channels to get the word out.
Yeah, I was already thinking about what community-based organizations that you all could be potentially partnering with in the future.
Yeah.
And so there's another question. Should interest rates drop in the future, will you refinance a loan?
So I'm going to go on a limb here and say our interest rates probably won't drop, to be honest. We're kind of a lender of last resort in many ways. It's not meant to be competitive with mortgage lending from lending institutions and banks. For Catalyst and Navigator, we probably wouldn't refinance, is my guess. But I don't know. I don't know what it would look like at 20 years, but we've had a lot of internal discussion about our rates, and I don't see them dropping anytime soon. For Smart E, we've already dropped those interest rates. Connecticut Green Bank, their interest rates are higher than those rates that I showed you. Those are the lower rates. And again, it's not secured personal loan, so it wouldn't get refinanced. And it probably won't go lower because long-term large loans unsecured is hard for credit unions and community banks. Again, no repayment penalties. So if people want to pay off more, they can.
Which is fantastic. Before we close, there's no more questions, but what would you all like to leave? There's a great podcast. I won't mention it because I don't know how that is on mentioning, but what is your kilowatt takeaway for the webinar attendees to have?
Melanie, you go first.
Yeah. I think that there's just a lot of really great stuff happening right now in this country around energy financing and clean energy. And environmental justice. And I think we're really on the precipice of some really big things. But it takes all of us together, working together, sharing resources. And I think that our partnership between IPC and the Texas Clean Energy Fund is just really a great example of how we can kind of partner together, share resources, so that way we can all be successful. Because this isn't really about IPC making money. We're a nonprofit. We just want to see a clean energy movement that's inclusive and that is easy and impactful at the end of the day.
Yeah, and I'll just add that in our mission statement, we really are intentional when we describe what we do as being a catalyst. No pun intended, but as a catalyst for economic development in many communities, whether they are again rural, urban, border communities. It really doesn't matter. I think that any deployment of resources into those communities has a ripple effect, not only for the property owner who benefits from lower cost of energy, but also in terms of all of those other businesses and people that are part of those projects. And so we really feel strongly that we want to be leveraged to be able to not only provide for better cash flow for homeowners and businesses, and even providing jobs, but also providing a better quality of life for a lot of folks, and in that helping folks to survive these extreme weather events that we're having, knowing that they have battery backup, they have renewable power, they have these resources that will help them to survive in tough situations. And I think that there's a trauma that happens in communities that are besieged with hurricanes, with cold weather events, with tornadoes, and unfortunately in Texas, everyone experiences at least one of those things all the time. But there is really a trauma involved in that, and so to be able to be in a position to alleviate those types of traumas, and at the same time improve the cash flow for people, and improve the environment, we just think is a win-win-win. So we hope that we can find partners here on this webinar to help us to advance that mission and to make an impact in communities throughout the state.
Well, I have learned a lot in this session, and I appreciate your time, and I thank you all for joining us. We will be sending the webinar and the slides after the event, and please do take the survey. And again, thanks again for joining us, and see you next time. Bye.
Thank you, everyone.